Good afternoon. Let's start today off with AUD/USD. Now, mind you, although today is a Monday, meaning the volume might be slow, the market can be a bit wonky and choppy because it's trying to correct itself for the whole week, right? Remind you that today we do have somewhat of a high impact news on USD here. So for AUD/USD, if you do not find any movement until the US session, that could be it. Okay, sometimes when pairs have somewhat of a high impact news going to affect them later in the day, it waits for that particular movement to happen. Okay, so just something to be aware of. All right, but I already marked. Oops. Okay, you know what? My pen just ran out of battery, but it's okay. Okay, so current price is over here. No. Current price is over here. We have our sell zone up top, which is an engulfing sell. Now, why did I mark this particular engulfing sell? Is because out of all the engulfing sells over here that I could have marked, we have candles over here that broke, but we don't find any engulfing sells over here, but we see a wick. Okay, so there are sellers over here that caused the price to create an engulfing sell. So I am using the most fresh one to make a zone, right? An engulfing sell itself. My buy zone over here that's closest to the current price is an engulfing sell meets an engulfing buy. Okay, that failed. The sell that failed that meets this buy. Same thing down here. What can the current price do? AUD/USD can either come here. If it closes within respecting our H4 zone, then potentially we can look for a buy back up. If it breaks below this, then we do have a lower price range or a price area for a buy from this EG buy that we can also wait for a buy. Okay, we will not be pressing any sells until the price comes into our sell zone over here and respects it, or in another scenario is when the price breaks our buy zone over here, because once it breaks, the price can either shoot down if the volume is high enough to test this price, our buy zone over here, or if after it breaks, the price can also retrace back, uses the key level to trampoline down. Okay, so we will not be pressing any sells until it respects this or breaks this. Okay, mind you, we wait for the price to retrace back. Okay, that's the key level, because once it breaks, you don't want to be floating. Could be 50, 60 pips. You don't know how far it's going to close to break this zone. So safest bet, or not safest bet, that is the wrong word, but the safest potential that you can do in the market, less risk, lowest risk you can do, is wait for the price to retrace back into our key level after breaking for a sell down. Okay, because the key levels can be used for both a buy and a sell, but you have to follow the direction of the higher time frame, okay, to lower your risk and kind of keep you out from unnecessary trades. Alright, so that's for AUD/USD. Now, where do you go to find your entries? Since these are marked in H4, my zones are marked in H4, so you check M15 first. If you cannot find any setups, then you switch down to M5, okay? But follow these two time frames to find your setups, meaning M5 and M15. Alright, now, EA, the next pair, we have a sell zone up top, which is currently in, so we're going to wait for it to test the key level first, and we have our buy zone, which is an engulfing sell that failed. Okay, this engulfing sell has been respected multiple times, and if the sellers are still very much present, then potentially we can catch a sell down. Okay, but what do? We wait for H4 to close first. For lower risk traders, right, we wait for the H4 to close first. If you have a high risk appetite, you can go ahead and switch down to M5 and M15 to find your entries when the price is testing those zones. But it's a higher risk. Why? It's a higher risk because you don't have the decision from the H4 yet, so you have no idea what the rest of the participants for that H4 is going to do. Either go higher or go lower. We don't know that, but it's not wrong to find an entry over there. It's just higher risk, so it's up to you how you want to manage your account. Okay, so again, if the price closes within, then potentially we can look for a sell back down, but that does not mean if it closes within it would sell down. No, we still have to see what we can find in our area, right, in our key level. If there are sell setups forming, then there's a higher chance for it to sell down, because we have both sellers in the smaller time frame plus the H4 that are aligning with each other. But if you find buy setups happening in this H4 sell zone, then there's a clash in the participants, right? But of course, if there are buy setups, what do? You wait for the H4 to break first, right? For the H4 to break first to confirm that the buyers are indeed there, right? Are indeed there. If the price drops into our buy zone and respects it, then potentially we can find a buy back up. But if it breaks down below, it can potentially test a lower area over here and then go from buy over here, okay? But if it breaks above our zone or breaks above this zone, it could shoot higher, okay? But if it breaks, let's say it breaks this zone down, what do? You wait for the next buy zone, or you wait for the price to retrace back into our key level to look for a sell setup down, okay? That's for EA. Oh, SL. Please do not forget your SL, okay? SLs are a must, especially if you are a beginner. You do not know where you're gonna close your trades, where you're gonna manually cut your trades. So SL is a must. Usually I put it at 40 pips. That's the very basic, not too tight, not too loose. But if you can refine it down and have a smaller SL, go for it. Okay, last but not least, GJ, one of your favorite pairs that I have a love-hate relationship with is GJ. We have our sell zone over here that you can see price has tested this zone multiple times, whether it's a buy or even now after breaking the zone, it's testing for a sell. Hence, I'm using this engulfing buy that failed. It created this first engulfing sell while failing, and we have our second engulfing sell. So on the H4 perspective, we have an A, B, C, or what I call a high liquidity zone, right? An HLZ. Below over here, we have this engulfing buy that I explained to you. Why is it important? Why am I marking this? Because last week, when we tried to get a buy, it was from this engulfing buy. The price broke, and I said when the price breaks, the price can usually, if it still respects it, can retrace back into the key level to use it as a sell down. But instead of doing that, it broke right back up, meaning there must be something, right? There must be something to push the price back up. So you see these wicks, 1, 2, 3 candles. So there's something over here, a hidden support somewhere that is trying to push the price up, and it pushed the price back up after failing this buy zone. Okay, so now that's why we're using it as our current buy zone, nearest to the current price. Okay, with 2 key levels. This key level is the one that this candle tested before this bounced into our sell zone, before it created the second engulfing sell to complete the HLZ. Or we have this, or so not or, but and we have our lower key level that this was the price that used to push to create this engulfing buy. Okay. Again, wait for the price to come either to our buy or sell. If you're a low risk trader, wait for the H4 to close first. If you are a high risk trader, then if the price reaches and you find setups, you can do that. But make sure to set break even when the price goes, okay? I usually set a benchmark at 20 pips. That's just me to BE everything, and for the rest, I just TP at the next level, okay? So again, if H4 breaks above or below our zones, there's a potential it could test a higher or a lower zone respectively. Where do you TP? Again, TP is something you're comfortable with. Me personally, if I were to get a sell from here, I would TP at the next key level, right? But some likes to TP before the next zone. Why not? Some like to hold for 40 pips. That's the basic to reach their daily target. Some likes to take 10, 20, 30 pips. So it's completely up to you how you want to do it, or even market structure. But slowly build your tolerance to it on how or what kind of trader you want to be, okay? So, because if you're not someone to hold for 50, 60 pips up to 100 pips like other traders, or even like me, then do something that you are comfortable with. Okay, so you're not forcing yourself into the market and out of the market with just losses. All right, so that's it for the 3 pairs. Please trade smart, trade wisely. It's a Monday. Do not rush. Okay, and I shall talk to you later. Have a good day. Bye.